Welcome back to another Tech Talk from MarketEdge.com, your source for unbiased technical analysis. My name is Rachel, and with me today is David Blake, CMT, here to discuss last week's stock market activity and what to look out for this week. David?
We're kind of in the midst of a little bit of an indecisive market here where everybody's anxious about whether or not we're going to get a December rate cut. And that's just gyrating stocks higher and lower like crazy. But last week, we came out of the box and we're looking at some of this delayed data that's going on here that was shut down. We're just starting to get stuff coming out towards the end of last week and this week. But we started out the week, we saw the major averages slip below their 50-day moving average. That's been a real point of support for the different indexes going back for, into the summer. We saw a lot of weakness in the Mag 7 stocks. And basically, we had a 2-day dive, especially in the NASDAQ that dropped almost about 5%. Global markets followed the U.S. market lower. Part of that was they were writing off the chance of a December rate hike. It jumped from 95% about a month ago all the way down to 30%. And then as the week ended, it jumped back up to about 60%. Now it's up to about 75% today. So you normally don't see moves like that, especially just for a quarter point rate cut. So I'm not exactly sure why they're so crazy about it, but that's the way the market's going right now. So anyway, so on that chance of a non-rate cut, we saw the AI bubble concerns start to pick up. We saw the high valuation of momentum stocks that kept downward pressure on a lot of those things. And then all of a sudden, Wednesday came out, we started to see the market start to firm up, and we had those blowout numbers from NVIDIA, which everybody jumped on. That briefly calmed the AI bubble fears. And then we saw an opening surge in all the different indexes on Thursday after the next morning after their earnings. And boy, that thing turned around. We had 1,000-point swing in the Dow Jones that day, which is only happened. I think it was a 5% swing in the NASDAQ, which has only happened, I read somewhere, only 3 or 4 times in the last 20 years or something like that. So it was kind of a big deal. You had a lot of, everybody jumping out. You had big turnarounds in Micron, Advanced Micro, Lam Research. They all tumbled. The Philadelphia Semiconductor Index actually fell down 4.77% on the day. It was up about 3.5% earlier too. So that's almost a 10% swing on that index, which is, you don't like to see that kind of thing. Now, I mentioned several weeks ago that often at bottoms or especially tops, you will see volatility pick up where you have these big swings, intraday swings in the market, which is just kind of a signal that there's a lot of nervous people out there. Now, I mentioned also that we did see the VIX jumped up on that Thursday to 28.27 on Thursday. It closed at 26.42. But I made a mention that when you see the VIX going over 25, it's normally a buying situation, especially if the market kind of settles down after that. And I said that if we can see it come back down below 25, that quick, that's normally a good entry point for another trade. But that kind of does, it shakes out people that are just chasing the market. They're, fear missing out, that type of thing. They jumped in. Now they're thinking, oh, I jumped in too late. I got to get out of here. And I think yesterday we got down to about 20 something on the VIX. So people are feeling a little bit better about a December rate cut, and they're not quite so nervous about the high valuations. There's a little bit of a pullback in the Mag 7 stocks and stuff like that. It made people feel pretty good. Okay, as far as what happened on Friday, we saw a turnaround there. We came down to basically the 100-day moving average, which is another key support level for the different indexes, which you want to watch, because if they break them, if they knife through these support ranges or resistance levels going the other way, you want to normally step back and wait to see what's going to happen. But just about all of the indexes bounced off that 100-day moving average on Thursday or Friday. And then they rallied up yesterday as we came in. I mentioned it last night in the daily commentary. They basically all traded up to the 50-day moving average, which again, once something support gets broken, then it becomes resistance. And I wanted to wait to do this Tech Talk today to see if we were going to just melt up through that 50-day moving average. And today, the NASDAQ and S&P 500 and the stocks are backing off of that. The Dow yesterday hit it and then bounced back, and the Dow's actually up again today, but it's just bumping into resistance again at that 50-day moving average. So I want to pull up a chart here real quick of what I'm referring to as far as these resistance and support areas go. This is the SPY, this is the S&P 500. As you can see here, let me just put that in here. Put the 100-day moving average in here also, since that's what we're referring to. As you can see right here, the SPY came down. We came all the way down to the 100-day moving average, bounced around there on Friday. Then we had the reversal. And then on Monday, we jumped back up, and sure enough, we came right into the 50-day moving average, where now is resistance. And this morning, we got up there in the S&P 500 as we're doing this right now. It's down about 7 or 8 points. The NASDAQ, let me pull that up, did the same thing. Okay, again, you can see that here, we came back here, dipped below the 100-day moving average briefly, then took off. Yesterday, we gapped up, and right, see where it came in right in here? That's exactly to the 50-day moving average. Normally, it's not that clean when you see these things. Maybe they go up a little bit, then pull back a little bit, but all these things went right to that level, and boom, they just stopped. They just stalled out. And today, the NASDAQ's down. We're down about 156 points. The Dow Jones, which is the diamond, take a look at that. It got up to that 50-day and pulled back. Now today, it's going up here, and it's almost touching the 50-day moving average again. Right as we speak, we're up 131 points. And that's, again, it's usually not this clean, but you are filling gaps, which is positive. But the fact that you can't get through this level is a little bit concerning. Kind of figuring today we might come through there and knife through that because it's the holiday week, and we'd probably end the market up higher, end the week higher, and then maybe start to kick off the Santa rally. But we want to see how this is going to go today, because it's not again, it's not acting quite like we expected things to go here. In fact, this morning when the Dow opened up, there were only 3 stocks that were lower, one of them being NVIDIA, which is weighing a little bit on the tech sector today, and the stocks, which also ran into the 50-day yesterday in the resistance. NVIDIA is down about 3 or 4%. Micron's down pretty good today. AMD's down. But Google, again, is making new highs, excuse me. And that's kind of picking up the slack a little bit for that. So I'm not sure how this is going to end. If you looked at the intraday chart this morning for the S&P 500, we went up, we went way down, then we went back up to even, now we went back down. It's zigzagging all over the place. So today will be an important day to see whether or not we're going to be able to get much more follow through on what we saw from Friday and Monday. Now, the technical condition that I mentioned, it's still a little bit deteriorating. Most of the technical indicators did fall into bearish territory, but as they did that, we also got several readings that we watched at the stochastics, that type of thing, that showed that the market was oversold. Not so much on the MarketEdge S&P oscillator that Jim Cramer talks about a little bit. We got down to about almost 4, which is oversold, but not where you normally start to see everybody jumping in to buy the dip. That usually has to get down to about 7 before you see that. But we did get the bounce, so we'll see how this is going to go. Again, today, we've also seen the VIX is staying flat. It's at 2059 right now, which is a little bit elevated, which just shows that there's a little bit of concern still whether this is going to break through this resistance level or not. Tomorrow is normally considered the best day of the holiday week. Normally, it's been up 83% of the time since 1961. And the overall week is up about 75% of the time, going back to 1961. So I do think we'll end up higher for the week. We'll have to see how that goes. Just briefly, also, we got a lot of economic data came in this week, or morning, I mean, and we were kind of worried a little bit about the inflation numbers. The PPI came in at 0.3 versus 0.3. This is for September now. We're still a little bit behind on the inflation numbers, but core PPI only rose 0.1% versus 0.2% that they were looking for. That's if you take it, the core is if you take out food and energy. I know right now food seems still high to me. I did my Thanksgiving shopping here this week, and to me, it's going to cost more. I don't know about everybody else. But then we saw retail sales were also a little bit weak. That was for September also. Just a little bit ago, we saw the consumer confidence come out. That's for October, which is a little bit more updated. And it fell down to 88.3. They were looking for a 93. So that came in weak. Consumer sentiment came in really weak, either Friday or Monday, too. So people aren't feeling so good about things right now. We'll have to see how this plays out. Again, what's going to happen next week is we're going to start to get a lot more updated information. I think that's going to determine whether or not we're going to get the December rate cut, number one. But also, bad news could be good news for the market. And the fact that if we get some bad news, then that's going to allow the Federal Reserve to cut rates in December, maybe again in January. That'll keep a floor into the market. So we'll kind of keep an eye on that. The PCE, I think, comes out next week. We also get the ADP employment rate. We get more jobless claims with construction spending, industrial production, and then consumer sentiment again next Friday. So I would say that for the rest of the week, it's going to be a little bit choppy. Again, people kind of leave a little bit early. But next week is going to be another week with a lot of updated information coming out, especially on the economic side. And that's going to determine whether or not we have that Christmas rally. I would expect we probably will. There's different factors besides just economic data that make the market go up in December, mainly because of bonuses and 401k contributions, that type of thing that for the end of the year. But I would be just a little bit cautious in here. I don't know that this 5% dip that we got last week is going to be it. The CTI, which is still negative, technically could have bottomed last week. What you want to see is whether or not yesterday's low holds for the Dow Jones the rest of the week. If it does, there's a chance that we could probably go to a positive reading or a bullish call in the market maybe sometime next week. So keep an eye on that. If we do start to roll over again, that would probably extend the cycles out a little bit longer. Also, if you're watching Bitcoin, keep an eye on that. That's if it's going to resume its uptrend, it needs to jump back above 92,000. People are watching this 80,000 where it hit a day or two ago. If that breaks out, then they're talking about the next support zone could go as low as 60, 65, something like that. So I would be careful with that. I wouldn't be anxious to jump into that just because it's down 30 some percent. It was trading with the NASDAQ. So we'll see if that correlation stays over here while it's selling off. But other than that, again, it's just everything is tied to whether or not we're going to get that December rate cut. And it's kind of a crazy way to trade. I think there's other things that you want to do besides just depending on that. So just be cautious in here. We're not ringing the bell for the Christmas rally yet, but there's still a good chance that we'll see that, especially if they do cut rates. You're liable to get a good positive reaction from that. And other than that, I hope everybody gets to spend Thanksgiving with family and friends and enjoy the holiday.
Great. Thanks so much, David. Is there anything else that people should know before they head out for Thanksgiving?
No, like I say, tomorrow, usually most of the volume dries up about by noon as Wall Street kind of heads out for the holidays and kind of shuts down. And then on Friday, we come back for a half a day. We're closed Thursday. And then on Friday, we'll be open till about 1 o'clock. And that's usually just not much of a trading day either. That's sometimes when you have these low volume days with a lot of people out there, you get more volatility because you don't have a lot of people from one side or the other balancing out each other. If we get a bear raid or a bull raid, you can see some big swings in the market. I don't pay much attention to those. That's just something that goes along with the low volume activity in the market. And so come back next week and we'll start getting some updated economic data that should set us up hopefully for a good start to the new year.
All right, very good. Thank you so much, David. If anyone has questions for David or anyone on the MarketEdge team, please feel free to send us an email at support@marketedge.com or use that leave a message feature in the bottom right-hand corner of your MarketEdge account. Otherwise, we'll see you guys next week. Thanks so much for watching. Don't forget to like, subscribe, and comment with any feedback you have. We love to hear it, and happy Thanksgiving to everyone. All right, thanks, David.